After having read through question number 6A, we understand it is on issue of shares, and it also contains where the applications which are received in excess are given back and shares are allotted on a pro rata basis. Now the shares that are being issued is 1 lakh. The face value of each share is 10, but the issue price is at a premium of rupees 2. That means the total amount we are going to collect is 12 rupees per share. And how is this amount to be collected? On application, we will be collecting 6 rupees, which is inclusive of the premium, that is 2 rupees per share. And on final call, the balance, which is 6 rupees per share. Now, what were the number of applications received? 2,50,000. How many applications were rejected? 1 lakh. But how many shares are we issuing? 1 lakh. We are issuing 1 lakh shares. But here the application received is 2,50,000. Applications rejected is 1 lakh. That means we are having a balance of 1,50,000. But we are issuing only 1 lakh. So the balance 50,000 is the excess amount in application which will be utilized at the time of allotment. Now we will go on to journalize the transactions. Now journalizing the first transaction, that is the application money. Bank account debit to share application and allotment money. What is the amount that we are receiving? 6 rupees per share. And how many applications have we received? 2,50,000. So 2,50,000 into 6, that makes it 15 lakhs. So bank account debit 15 lakhs, to share application account 15 lakhs. Being application money received 2,50,000 at rupees 6 per share. Now this application money that we have received, out of this, how many applications have we rejected? 1 lakh. So the entry is share application account debit 6 lakhs, because how many shares are we rejecting? Applications are we rejecting? 1 lakh shares. How much have they paid per share? 6 rupees. So 6 lakhs. So share application account debit 6 lakhs, to bank 6 lakhs. Now, after having given back to the applicants where we have rejected their applications, we now go on to transfer this share application money to the equity share capital. So share application account debit, this is the amount that is there with us, 6 lakhs, to equity share capital 4 lakhs, to security premium 2 lakhs. Now how do we get this amount? How many shares are we issuing? 1 lakh. So how much can I transfer to the equity share capital? On 1 lakh shares. So 1 lakh, 4 rupees is the capital amount, equity capital amount, and 1 lakh into 2, which is the premium amount. That's how I get it. Now we have to transfer. We go on to the stage where we are asking for the final call money, and therefore the board passes the resolution. Therefore we need to pass this entry first before entering for the bank transaction. So the entry will be first and final call account debit to equity share capital. And what is the amount that is remaining? 6 rupees per share. On how many shares that were issued? 1 lakh. So that works out to 6 lakhs. We now check out for where a particular applicant who was allotted shares, and now the shares, they have not paid the amount. So we move on to the calls in areas. Now we are calculating as to what exactly is the calls in areas. They tell us that Jane applied for 3,000 shares. So we want to know how many shares were allotted to her. If for 1,50,000 applications you are allotting 1 lakh shares, see, we received 2,50,000 applications, but 1 lakh were rejected and refund made. So how many application money were remaining with us? 1,50,000. So for 1,50,000 we are making an allotment of 1 lakh. Now Jane had applied for 3,000 shares. So how many shares was she allotted? 2,000 shares. So we will now go on to find out what exactly is the areas. But remember, Jane had already paid in excess for 1,000 shares. She had already paid in excess for 1,000 shares. So that money is also there. So we need to know as to what the calls in areas would be. We now record the amount that is being received on the final call. What is the amount that we should receive at final call? 6 lakhs, because 1 lakh shares were allotted. So 6 rupees per share at the time of final call. So that works out to 6 lakhs. We are already having excess money in the application account. On how many shares? 50,000 shares. So 50,000 into what was the amount paid by these applicants per share? 6 rupees. That works out to 3 lakhs. The calls in areas for Jane works out to 6,000. Now normally the calls in areas for Jane would have worked out to 12,000 rupees because she was allotted 2,000 shares. But her excess money is there in the application account. So that has been utilized. So her her calls in areas works out to 6,000. And therefore the balance is the amount we have received by bank. Now, because Jane did not make her payment, her shares were forfeited. Now, when we are forfeiting the shares, how many shares of Jane will I forfeit? 2,000 shares. What is the price, face value of each share? 10 rupees. So, equity share capital account debit. Her calls in areas was 6,000. To share forfeiture, that is when we forfeit the shares, the amount paid by the person whose shares we are forfeiting is transferred to the account called as the share forfeiture account. Now, what are they doing after having forfeited the shares of Jane? They are reissuing these shares. So how many shares can they reissue? 2,000 shares, because Jane held 2,000 shares. So 2,000 shares are being reissued. So 2,000 into 10 rupees because they have been issued at the full price. So 2,000 into 10, that works out to 20,000. But what is the reissue price? 8 rupees. So 2,000 into 8, 16,000. So there is still a deficit. This deficit is utilized from the share forfeiture account, which is 6,000. So from 6,000, the balance 4,000 will be utilized. Stop. And now focus on the 8th point. What is this 8th point? It is the excess amount that remains in the forfeiture account after the forfeited shares have been reissued. Now, what is the amount that we received when we forfeited the shares in share forfeiture? 14,000. How much of it was utilized on the reissue of this forfeited shares? 4,000. Therefore, the balance, that is 10,000, remember, has to be transferred to the capital reserve account. Therefore, the entry is the balance of the share forfeiture or the excess in the share forfeiture is transferred to the capital reserve account. We now move on to question 6b, and it's theoretical. It says define measurement and valuation principles in brief. Now, when we are talking about measurement, we normally, in accountancy, we take it in terms of monetary terms. Therefore, the measurement, any transaction, any commodity, any product, when we are accounting for it, needs to have the money concept in it. And therefore, this becomes a standard method of valuing it, and that's called as measurement. Now, what is the purpose? The purpose is that it becomes accurate, reliable, and consistent, because it's based on facts and figures and proper valuation, and that's what we call as measurement. Now, what is the valuation principles? They are normally the guidelines used to arrange monetary values to assets and liabilities. Now, there are 5 valuation bases: historical, current cost method, realizable value, present value, and fair value. And you will have to write a little bit in detailed notes about it.